The government last fall introduced a series of guidelines for people specifically who are purchasing a home and putting less than 20% down. And they called the main rule was the stress test, in which the borrower has to demonstrate that they can qualify for the mortgage, not at their actual mortgage rate that they receive in their approval, but at a higher interest rate, to demonstrate that if rates do rise, they can continue to afford the mortgage payments. We called this the prescribed interest rate. It's set by the government from time to time. And again, basically it's designed to show a lender that when we do our calculations of affordability, that you can carry that mortgage even if the rate does climb beyond the actual contract rate. Now, as of January the 1st, 2018, the new rule will be that we have to also apply those rules to people putting 20% down or more who are taking a 5-year fixed rate mortgage as well. Before the rules changed, I would approve a person, or I would qualify a person based on their actual interest rate. So let's say, for example, they took a 5-year mortgage and they had a rate of 2.75. Mm-hmm. I could demonstrate that the person could carry that mortgage using payments based on a rate of 2.75%.
Yes.
The new rules, or the rules for less than 20% down, which already existed, tell me that I have to make sure that the person can carry the mortgage if it were, using today's rate, 4.89. That's called the prescribed rate. So you can imagine qualifying at 2.75 to 4.89 is a big difference. So it probably shaves off, $50,000 to $75,000, maybe even up to $100,000 on your maximum mortgage amount that you could have.
Okay. So this is already in place. We already know this.
We already have this for people who are putting less than 20% down.
Now, the big news and the big problem with our future going forward, as far as buying is concerned, is that they're now implementing this for everybody who's putting 20% or more down, correct?
That's right. So we still stress tested even some deals where people put 20% down or more when they went with a mortgage that was less than 5 years. Mm-hmm. So if they took a variable rate mortgage, or if they took a 4-year, 3-year, anything less than 5 years, we still had to stress test them even if they did put 20% down or more. What's changed now is that final piece. Even if they put 20% down and they want a 5-year fixed rate mortgage, the stress test is now introduced in those scenarios as well, and it wasn't before. And it will have a major impact on the maximum mortgage that a person can qualify for based on this higher interest rate called a stress test.
I actually read the other day, it was, I can't remember, Globe and Mail or whatever. They said an family income of about $100,000 with 20% down would be able to buy something in the $720,000 range. Does that sound about right?
Under the old rules or the new rules? Probably under the old rules. That's probably...
Yeah, under the old rules,
yes.
Exactly. So with the new changes coming in, that's going to change considerably. They said that same number,
yes,
the same price, the home price, will drop to $570,000.
That's right. So
first of all, that doesn't even exist in the GTA.
That's right. That's right.
So what do you see? I know from my perspective, I don't have a crystal ball. I wish I did. But if I had a crystal ball, to me, this sounds like it's going to be pretty devastating if it goes through.
I think that the logic behind doing this, the logic of it makes sense. It is a prudent way that people should probably run their lives, their own personal budgets. However, having said that, it will definitely hurt a layer of the public and prevent them from moving forward to buy a home. So there will be solutions that people will not refrain from buying a house. As you know, water always finds its level, and people will figure out a way to purchase that house. Mm-hmm. And new lenders, new programs most likely will emerge to help people in that situation. So, however, the whole thing, as you know, if we're doing something to help somebody that otherwise couldn't, get that at their regular financial institution, the whole cost of that thing is going to be more expensive, right? So that's the concern that I personally have, that any solution that we put in place for somebody is now going to cost more as of January the 1st than it might have been before January the 1st.
So we were talking about this the other day about how maybe some private lending will start coming into play. VTBs, which is vendor take back for anybody who doesn't understand that. So in other words, back in the old days, this is before the banks got involved. My father, for example, my parents, they went to go buy a house, and they did not go to the bank. They went right to the owner of the house. They had put a down payment. They paid the owner directly. He literally had to walk 2 blocks away and give him a check or cash or whatever it was every single month because there was no bank involved.
Right. I don't think we're probably not going way back to the 1960s. That was probably when that was prevalent. Yeah. However, it'll be interesting to see how people adapt. So there'll definitely still be a segment of the population which will still be able to buy a house and qualify even with the new rules. But what this affects, though, is those people that, if you're putting 20% down, on a $750,000 purchase, you've done well. You've saved some money. You got a chunk of money, so you've managed your money well. But whether because you're self-employed and you're employing some tax efficiencies in your income tax preparation, or whether you have 2 or 3 jobs, or the different ways that people earn money, which may not be so easily verified through a tax return as the bank wants to see.
Yes.
There will be a layer of those people that will be affected by these rules. It doesn't mean that they're not going to want to go out and buy a house. They probably still will go out and want to buy a house, but we'll have to start to look at things like, can we get the money from institutions that are not federally regulated? So these rule changes affect institutions that are regulated under OSFI, right? So the Ontario Superintendent of Financial Institutions. Yeah. There are financial institutions that do exist that are not regulated by that body, such as credit unions. So they may step forward and fill in a gap that exists. Or there is a down payment in which even the rules do permit some flexibility, where they're called non-conforming deals, and that's when people put 35% down or more. So
that won't apply if you're putting
the rules. The way that they've worded it is, they don't want those financial institutions to completely abandon their rules simply because somebody's putting 35% down. However, they will be permitted to build business cases in which, when the person doesn't comply with those rules, why that they would still accept doing that loan. So there will be loans as of today. So for example, a foreign investor who's purchasing a property here in Canada, we have programs where we can do 65% financing because the person put 35% down, and banks will give that investor money under a mortgage. There are still checks and balances to make sure that the people can carry, but they're definitely less restrictive than somebody who's putting less than 35% down. So that will exist. My feeling is that more non-conforming deals will be approved as a result of this by the banks. Mm-hmm. And certainly the non-conforming if you put 35% down plus, as you have mentioned, a second mortgage, such as a vendor take back, mm-hmm. or a privately funded mortgage to bring you back to 80%, which is the threshold for the CMHC. Those deals will probably become you'll see more of those deals happening, mm-hmm. as a way to navigate through the new rules.
Do you think that this, I know crystal ball, I know we all wish we had one. Do you think this will affect the prices yourself? I mean, being in the mortgage industry.
My personal opinion is that when the new rules for the people putting less than 20% down came into play, that whole market segment died. Mm-hmm. So we saw very little, if that was 40% of my business prior to the rule change, it became 5% of my business. Yeah. And that whole thing, I mean, the volumes are very much down year over year as a result of those rule changes that occurred last fall for the high ratio mortgage. Mm-hmm. If that same trend occurs with this new change that's happening, there's a very good possibility that we could see a very a correction in prices, because less people will be able to get the financing to purchase the house.
Yeah. Again, we can't predict what's going to happen.
We don't know.
All we can do is sort of like maybe see a little bit into the future based on the information that we have today. Is there anything that you could suggest or recommend to people right now to do? I know what my recommendation is, and I'm pretty sure you're going to say the same thing, but...
Yeah. My recommendation is if people need to buy a house, try to buy the house before the rule changes kick in. So that, if there's any concern whatsoever, you can eliminate that concern completely by simply purchasing your house before the rule changes.
And that's with a purchase and sale agreement in place. You don't have to own the house before January 1st.
That's right. You have to do your contract and have your mortgage approved prior to January 1st.
Okay.
You can still close your deal post January 1st, right? After January 1st. So that would be my main thing. If you have to sell your house, there's uncertainty around the corner. So we have both said that we don't know what's going to happen with real estate values. Okay. Yeah. But if you're a person that is considering selling your house, you can eliminate that uncertainty by selling your house now.
Yeah.
Rather than waiting. But, my main thing is don't let your personal circumstances, don't let these rule changes change your personal circumstances. That has to be the most important driver of your decision.
Absolutely.
Yeah. But, have this knowledge and understand that if you act different, there might be a little time gap in which you could benefit yourself by moving sooner than later.
Mm-hmm. Any other advice? Obviously, it might be a good idea for somebody to start the process of getting pre-qualified ahead of time, maybe, or will it help if because the rule changes are happening, will it help?
It's always a good idea to be pre-qualified. I'm sure you've told all your prospective buyers to look at the financing questions even before they start looking for a house.
Absolutely.
You know how it is. You start looking and you fall in love with something and you didn't organize the financial part of it, and that's the thing that's going to prevent you from moving forward. You don't want that. So I always tell people pre-qualifying is one of the most important things that you can do when you're out looking. It allows you also to put offers on places with a greater deal of confidence. So it's an important thing. I don't know that I don't think that the pre-qualifying, I haven't seen specific rules surrounding this, but I don't think that the pre-qualifying without an actual contract to buy will help you in the rule change.
Yeah.
So if you have a contract and it falls over January 1, you're good. You're okay under the old rules. But the pre-approval, if we flip over after January 1st and you don't buy a place until January 5th, you're going to be subject to the new rules. And that's how it's traditionally been done.
Yeah, of course. Well, okay. I appreciate your input. You're many, many years. Was it 30 years now?
I don't want to even think about it. It's almost 30 years. It's since 1990 is when I started working in the business.
You've seen a couple of up and down markets.
When I started, it was right on the heels of the crash we had back in 1989. And I started to work right at the peak of it, but the wheels fell off very quickly in the ensuing year in 1990.
Yeah.
And honestly, we didn't see any major recovery in real estate until maybe even 6 years later.
Wow.
So, we've seen that, the feast and famine and the trough at the end there. So I don't know how this thing all ends up, how it all ends up.
Well, at the end of the day, we're going to have to go through it. No matter what happens, it happens, right? It's...
Exactly. I like to think that there's going to be a floor to it, though, because buyers might otherwise be sitting on the sideline, if the price comes down, they will enter into the marketplace as well.
Sure.
So there's probably going to be a floor to it. We just don't know where that floor is, basically, right?
Perfect. How can people contact you?
The best place is by phone, so 416-931-3893, or by email, rbizzoni, so rbizzoni1 @gmail.com.
Perfect. And you all know me, Robert, gtapropertysearch.com, 416-918-2758. Thank you for coming on the show.
Thank you for having me.